Welcome back, everybody, to another installment of our video education session. Today we are going to be talking a little bit about this topic right here on the currency and commodity pairs that we trade and why. So as a Forex trader or a commodity trader or any general market trader, you'll notice that there are literally tens of thousands of different options, especially with trading stocks that you can choose from. And the big question is what to trade, when to trade it, and why. So specifically relating to Forex, that's what we're going to be discussing a little bit about today. Talking about why we choose the currency pairs that we trade and some of the commodity pairs that we trade, and a little bit about how they are all related and some of their cross relationships. So what I'm going to do is jump over to a chart just to give you an idea and to start on the basics. And I'll run through all of the different pairs that you see on the bottom here and show you exactly why we are looking at all of these. Now, in your Forex trading platform, if you click on your different pairs that are available, you'll notice there are a plethora of different crosses that you can pair, that you can choose from in currency trading. I mean, anything from traded with the USD to Aussie pairs, Swissy pairs, the pound sterling, euro pairs, and on and on and on and on and on. So really, it's very easy to get lost sort of in the abyss of different currencies to choose from. But what we like to do at F45 Trading is keep it specific and keep it to the majors. So pretty much anything paired with the US dollar index is going to be a major cross. And that's sort of the ones that we focus in on trades. Now, we can get into things like the exotic pairs and things of that nature, which I will cover here in a minute. But for the most part, we like to stick with the majors. And the reason is because they're consistent, they're reliable, and they're predictable. And when we're trading, especially in Forex and commodities, we want to make sure that the signals we're putting out are going to be predictable and repeatable, and that's the secret to being a profitable trader. It's as simple as that. So we start off with the dollar index, and we don't actually trade the dollar index. We just use this as a hedge to the other currency pairs that we're looking at. So this really gives us a barometer as to where we think the market is going, and this is where we start looking and doing our analysis on first. Once we get the directional bias on the US dollar index, then we go in and dial it into the specific currency pair that we trade. So let's just say, for instance, we are, I don't know, bearish on the US index. Let's say prices come down here and it wants to keep going lower and go below this 92.40 level here. Let's just say. So we're bearish dollar index. Well, what that means is we are now going to look at the cross pairs that are coupled with the US dollar index. So we come over to the Euro USD. Typically what happens if the US dollar index is going up or going down, we are going to see the inverse result on the Euro USD. So you can see the euro is the first pair, or sorry, the first financial instrument in the Euro USD pair. So if the dollar index is going down, we should see the opposite happening in the euro. It should be going up. Now, there's other ways that you can specifically pinpoint exactly where it is, where it's going, when it's going, how it's going to get there, and some of the levels to key off of on the future markets. But we won't be getting into that today for this purpose. But just so you know, as a general rule of thumb, if the U.S. index is going up, if it's going down, the Euro USD should be going up. And vice versa. If the US dollar index is going up, the euro should be going down. So that's sort of how we hedge that and get to our directional bias on that. It all stems down from the US dollar index. So you can see here the US dollar index has been on a bit of a slide the past week, and we see that corresponding. I'll just flip over to a daily chart. We see the exact opposite happening with the Euro USD. So we would now say come in here and pick our levels out and say, okay, we are bearish USD, so we're bullish Euro USD, so let's look for higher prices in the Euro USD market. And then we would go in and we would put out signals and base our analysis off of that. The next pair that we'd be looking at is the GBPUSD. Now this is where things get a little bit tricky. For the most part, as I mentioned before, anything coupled with the USD should be doing the exact opposite. So GBP is the first the first market in the GBP-USD pair, so it should be going up as well. Well, you can see here it's been consolidating. I'll just get rid of some of this shrapnel on the chart here, just so we can clear this up a little bit for you. Sorry, guys. There we go. So you can see here price has actually been consolidating. So it hasn't really picked a clear direction that it wants to go in. It's sort of just been chopping back and forth, back and forth, and back and forth. That does happen sometimes with some of the pairs. If you get a clear breakout in one direction on the US dollar, sometimes its cross pair does just sit there and chop sideways. So what we want to do for that is we want to go over to this pair right here. And this is just specifically for the GBP USD or the cable or the Euro USD, which is the fiber. You go over to the Euro GBP cross and you look and you find out what this has been doing. Now you gotta look at the front instrument in this pair. So Euro we'd be looking at is the first one. So if this is going up, if the Euro is going up, it should be driving this pair up as well. And you can see here it has been driving this pair up as well too. So again, you'd be bullish Euro USD. Sometimes though, it will consolidate. So you aren't always necessarily bearish GBP. Sometimes again, they'll hold this in consolidation while they're running the other pair up and vice versa. So you got to look to your crosses. So you get your major bias off the the US dollar index. You got to go into your crosses to find out which pair is actually going to be moving. And they'll move the Euro USD one week and hold the GBP in consolidation, or it'll be vice versa. The Euro USD will be going into a consolidation and they'll be moving the GBP USD in the correct direction, the opposite direction of the US index. So you kind of got to watch, you got to look at all three pairs for these major pairs here that we trade and find out exactly who's doing what and where it's going to. So those are two of the major pairs. We don't typically trade the Euro GBP. We just get, again, a directional bias from this pair and relate that to the Euro USD and the GBP USD. So the next pair that we look at is the USCAD, the next major. Now the USCAD, again, it actually, you notice here, USD is the first in this pair. So if the USD is going down, the USCAD should be going down as well. And I'll flip out to a daily. And you can see here, again, I've got some levels on here. I'll just get rid of that so you can clean this chart up a little bit. So you can see here, price has been dropping. Not quite as much as the Euro, as the USD, but it definitely has been dropping. It's actually, this pair has actually been in a bit of a consolidation for the past couple of weeks now. You can see here, I'll just highlight this on the chart. You can see here, it's just sort of been chopping sideways. Fairly big range, but it has been in a consolidation. So we would look obviously out to higher timelines and kind of pick our levels out from there. But for the most part, the past 3 days, it has been going down in tandem with the US dollar index. Again, you just got to look at that front currency in that pair, and that's where your directional bias will be derived from the US dollar index. So whatever the US dollar does, USCAD should also do as well too. Again, because the USD is the front currency in that pair. Now, the tricky part with the USCAD is that country's currency is actually heavily weighted to crude oil, because crude oil is one of the major exports of Canada. So it actually gets a lot of its currency strength or weakness based on what the price of crude oil is. So you can see here, crude oil has actually been going up. And so if crude oil is going up, that means the US CAD is getting stronger, which means the US CAD pair is going to actually get weaker. So you got to watch for that. There's a couple of little tricks with trading the US CAD that you got to watch, but it is very heavily weighted with crude oil. So the major pairs that we trade, again, we get our bias from the US dollar index. We trade the EURUSD, the GBPUSD, and the US CAD. And in conjunction with the US CAD, to get our bias, we also trade oil. So those are the start of the major pairs and currencies that we trade. The next, we go into the Australian dollar, US dollar. Again, this is the same thing as the EURUSD and the GBP. We get our directional bias from the US dollar index. So if the US dollar index is going down, this pair should be obviously going up. And you can see here, we've had a nice uptrend on the Australian dollar. The next one is the New Zealand dollar. We don't send out a ton of signals for this. We do trade it every now and then if we see some levels that we like, but it's coupled the same way as the Australian dollar is. And in order to get the cross pair on this, you would go to the Aussie NZD and Aussie New Zealand dollar, and you would get the directional bias from there as well too. I won't go into that today, but it works the exact same way as the Euro-USD, the GBP, and the Euro-GBP cross pair. Next, we go on to the US yen pair. This one, again, all we basically trade is all the major cross pairs with the US dollar index. So, US dollar index down, UJ up. And you can see there, it's very straightforward, very easy. That's another major currency that we trade. The US dollar and Swiss franc. Again, it's this pair is actually a little bit more tricky. I won't get into this too much, but it actually is very driven by what the Euro-USD is doing. So it's very similar, but it tends to actually work in exact opposite. So if the Euro-USD is going up, the USD Swissy will actually be going down, and you can kind of see that right there. It's technically it's actually just been chopping sort of sideways and sort of working its way into this triangle formation here. But for the most part, it usually trends opposite of what the Euro-USD does. But we can go into that in a little bit more detail in some of the analysis to make sure that you understand that in a little more detail. Now, the last one that we trade in terms of a commodity is copper, and the only reason for this isn't pegged to any currency other than the US dollar index, obviously, which is sort of the king, but we just trade this pair because it's just got a very nice confluence, a very nice movement. It's been in a very nice uptrend, and it's actually very easy to trade this pair. So that's why one of these is on the signals. Now, the great thing about your broker that you provide is there are typically several different options with different commodities that you can trade, and you can go through there and you can see all of the different options provided by your broker, and they all offer different ones. There's no two that are the same. Some offer the Dow Jones and the Hang Seng and the Cross and the S&P 500s, which is one of the pairs that we trade as well. some off of oil and different Japanese markets and Asian markets, copper and palladium and everything else in between. So you just gotta go through your broker and determine which ones you like, which ones you want to trade. Again, we trade off of all the majors, so all the major USD pairs, the fiber, cable, the loonie, oil, the Aussie, the UJ, the Swissy, and on and on and on and on. And then again, the last one was the S&P 500. We also trade this one as well. This is a major index in the US, and it has been on an absolute tear. So this was a fun one to trade as well too. So we also do offer signals on that one for you as well. Now, the things that we try to avoid are the exotics, and by exotics I mean the GBP, the pound yen. This pair is you can get some big movement in this pair. If it trends really nice and we can get a clear signal, we will send out some notes on it for sure. But for the most part, you can see here, trading has not been very favorable for the past few months on this pair. It's just been chopping straight sideways. When you get into instances like this, where the price is in a clear pattern and it's in a clear uptrend, or it's in a clear downtrend, then yes, you absolutely do want to trade these cross pairs because they're great and you can see some big movement on them. But for the most part, we don't do a lot of signals on these ones. The other ones obviously include the pound Swiss, pound Swissy. We don't trade that one. Again, another exotic. The GBP, AUD, things of that nature. Those are considered exotics, and we don't do a lot of trading on that. We stick to the majors, the EURUSD, the GBPUSD, the USD CAD, oil, again, S&P, Aussie, things of that nature. So going forward as well too, we'll be offering more bonds, the 30-year bond in particular, in terms of signals. And we do that because bonds, again, are very heavily weighted with what the price of the US dollar index is doing. So we do a lot of analysis on bonds and send out some signals for bonds as well too, that are coupled with the US dollar index and interest rates. And that obviously reverberates down amongst all the currency baskets that we trade as well too. So hopefully that gives you a good idea as to why we trade some of the current markets that we trade. If you do trade a pair in particular that you really like, that you want some insight on, by all means, send us an email to f45trading@gmail.com, and we'd be more than happy to entertain that, have a look at it, and do a little bit of discussion. Maybe we could even do a specialized live webinar on that specific pair that you like to trade, and show you some analysis and some of our thoughts on it. Be more than happy to help you with that. And other than that, that's going to wrap up this video episode for the day. So we will be uploading several other ones throughout the rest of the month here, and we look forward to working with you in the future. Thank you very much, and have a great day.